Hello everyone, and welcome back to my channel. For those of you who are new here, my name is Jennifer Etherton. I am the founder, Notary Public, and loan signing agent for Moonlight Mobile Notary here in Fishers, Indiana. Today's video, we are going to look at the practical side of refinancing. With mortgage rates sustaining at the lowest levels since before the 2008 housing crash, it is important for those of you who decide to take advantage of the favorable interest rates to really understand what you're getting into and what to expect. Now, I am going to be looking at this from my point of view. I am a loan signing agent, also called a closer, and this is really what to expect at the closing table. So what is a refinance? A refinance is when you pay off your current mortgage to get a new mortgage. Now, I oversimplify the explanation when I say you are basically selling your house to yourself. That's what you're basically doing. You are paying off your mortgage with borrowed money. There are many reasons why individuals decide they want to refinance their homes, and some of them are very obvious. The rates are lower. They refinance exactly what they owe just to get the lower rate and a lower payment. Others may take advantage of the lower rate and try to shave time off their loan. Say you have a $500,000 house and you originally got a 30-year mortgage. Now rates are so low, the option to say get a 15-year mortgage on the remaining balance will save tens of thousands of dollars in the long run. Other reasons why people refinance their homes is to cash out the equity in their home. So you have that same $500,000 mortgage, you've paid down $100,000 or so of it, and on top of that your house has increased in value to say a $600,000 home. You have that $200,000 worth of equity that you can cash out and use for other purposes, such as a remodel or college, medical bills. So there are many options, and depending on your situation, it may be beneficial. Will refinancing your home be beneficial in the long run? What are you going to get out of it? And as long as the numbers are right and the reasons are right, there is every reason why you should take advantage of the new and lower interest rate. Say that you do. You talk to your loan officer, he or she can give you a lower rate, a lower payment, time, all of the above. What do you do from there? Your loan officer and your title agent will walk you through their part of the process. Now you're at the closing. You have it scheduled. So someone is coming out to your house, or you're meeting at the bank or title company. What should you expect at the closing table? And now I have written myself some notes, so if I'm looking down, I'm wanting to be as thorough and as honest as possible. The first thing is your closer, whether you're going to be going to the appointment at a title company or someone is coming to you, your closer will bring your documents package. We are responsible to not only bring the package that is going back to the title company, but also to bring you a copy of every single page. Most title companies require you to have a physical copy, paper. I bring paper to my clients. Other closers don't, but you can always request a paper copy. It's completely up to you. Things that are needed on your part. Make sure to have your identification ready. Driver's license, passport, and I always recommend to have 2 forms of ID ready. A lot of banks require 2 forms of ID. If you're curious on what types of IDs are acceptable, I actually created a video going over that very subject, and I'll link a card up here to that video so you can understand what we were looking for when it comes to the proper identification for a loan sign. The next thing you should be prepared for is if you need to bring cash to close. So you have to pay in funds to close the loan. If this is required, it's perfectly fine, but you need to ask your loan officer what type of payment is accepted. Now, it is up to you to provide the correct form of payment. You can always ask your loan officer, but here in Indiana, we have a simple rule of thumb. Personal checks are only accepted for $1,500 or less. $1,500 to, I believe it's $10,000. A cashier's check is more than acceptable, and anything over that, a wire is required. This has to be at the closing table. If there are any variations, it is important to tell your closer, and they have either got to get it approved or you need to prove that you've already got it approved. Two forms of payment that are never accepted ever are money orders and cash. I can't take it, I won't take it, and it'll hold up a loan. So don't even try. Now, on the flip side, if you're going to receive money back, if your closer is coming to your house, we don't have a check for you. We don't. But what we do have is a form where you can choose how you want to receive your funds. There are 2/3 options. You can have a check that is either mailed by the United States Postal Service, or you can have a check overnighted, or you can have it wired. To have a check sent to you, it's usually free. Title company is not going to charge you to send you money. A wire, however, does have a fee attached to it, and that fee is actually dictated by your bank. So the title company does not charge for the wire, your bank will charge for it. So it's important to know what that fee is, and every bank is different. They usually have a fee schedule, or you can just call and ask. Tellers will be more than happy to tell you how much a wire costs. Get into the package itself. Packages are usually between 130 something pages to 300 pages, depending on the type of loan. I have seen some packages as low as 90 pages, but they're rare, and they're usually cash buyers. I'm not going to go into too much detail because you are talking about over 100 pages. I will be creating a series going over each type of document, so stay tuned for that. I will go over the documents that you really need to pay attention to. Now, all the documents are important. Don't skim over any of them. You really need to understand what you're signing. But the documents that I am about to list are the ones that will give you the maximum amount of information for the least amount of effort. You really need to pay attention to them. First and foremost is the closing disclosure. The closing disclosure boils down the entire package. It is a quick and dirty summary of your loan amount, your interest rate, your payments, the closing cost, any escrow and private mortgage insurance that you have attached to the loan, and whether or not you're getting any money back, and exactly how much money you're getting back. This document I actually put on top. This is the one I describe first. The reason why is if there are any errors in the closing disclosure, there are going to be compounded errors in other documents. So it's always good to start with the broadest strokes first, so you can take care of any errors or any questions right off the bat. Not to mention, it also answers a lot of questions that you as a borrower are going to have. Basically, I'm answering questions before you think of them. And that is a sign of a good closing agent. If I can answer questions you didn't even know you had, then you know you have got someone who understands their role. The next most important document is the Alta statement or the settlement statement. Now, I relate this very closely to the closing disclosure. It's just in accounting form or checkbook form. And to me, it's easier to find credits. So the closing disclosure has a few pages in it, and there is a page that breaks down all the closing costs, and it does have some credits listed, but they're kind of hard to discern, and you really have to look at them closely. The Alta statement, it is glaringly obvious where the credits are. If there are any questions about credits or what you're paying for your closing cost, it is much easier to see the differences. The numbers between the closing statement and the Alta statement are exactly the same. They are just presented differently, so it's easier to find certain bits of information. The next basically packet of papers is the note. The note is the loan itself. It is the whole reason I just invaded your dining room. This will list information such as your loan amount, your lender, your interest rate, your first payment, and your maturity date, as well as your payment of principal and interest only. I will go into much greater detail in the future when I get to that part of the document series. The note is very important because it outlines the loan itself. It details what is expected of you and what is expected of your lender. So it's vital to pay attention to what it said. The last packet of papers that I personally believe are vital is the right to cancel. If you are refinancing your primary residence, so the house you live in, you have something called a right to rescind. You have 3 business days by law to cancel the loan. It's important to remember, Saturday is a business day. You have 3 business days from the date of your closing, from when I invade your house, to cancel the loan. That is so you can review the full loan papers that I sent you or I give to you and really dig deep into the numbers and make sure that this is right for your situation. If you don't want to cancel a loan and you just want to go forward, that's fine. You just wait the 3 days and then the closing process begins. If you decide you want to cancel, it is imperative that you read the right to cancel or right to rescind paperwork, fill it out properly, and send it in properly. Now, I always say that it is your absolute right to wait until midnight on the last day, but if you do, to always call and give your lender a voicemail stating your intention to cancel. Yes, in a way it stops the clock, but the key is if you're waiting till midnight at the very last second to cancel the loan, it ensures that nothing gets messed up, lines don't get crossed, and there's no miscommunication. You are talking about a lot of money, and you're also talking about the place you live. So you always want to make sure that remains as safe as possible. A closing can take as long as you need it to take. I have gotten through closings in 9 minutes. I don't recommend that because I'm not going over anything. Everybody is in a hurry and there's a lot that can go wrong. But a normal meeting can take anywhere from 45 minutes to 3 hours. Why is there such a disparity? Well, obviously the 45-minute meetings, you're not really reading much. You're taking the explanation of your closer as face value. You're looking at numbers that are pointed out to you, and then you're basically signing and going on about your day. That's perfectly fine. It's completely up to you. Again, you have a copy, so you can always go back and review everything. But if you want to take a little longer, or if you have a question, that's going to add time. My meetings on average take about an hour to an hour and a half. It's going to be a mixture of clients taking me at face value. I do this for a living, and I'm not going to lie to my clients. It's not worth losing my license over. But there's always a question, or there's always something that's not really understood. It takes time to get the answers that are needed. I have had meetings last 3 hours. Why have they lasted 3 hours? And that is because my clients have read every single word of every single page for 150 pages. It takes a minute. It is your absolute right. It is your absolute right to know what you are signing. I will not rush you. If you want to take that long, that is perfectly fine. I will, however, excuse myself, call my next client and tell them I'm running late. But I will not rush you through the process. And no good closer will rush you through the process. If you want to read every word, read every word. That is up to you. It is important to always understand what you are signing, especially when it comes to loan documents. Once the meeting is over, I will take one copy. I'll take the copy that we signed and I will take it with me. I will process it, which here in Indiana means I'm just going to double check to make sure I've stamped everything, got all the signatures and dates, and everything looks pretty and everything is back in the order that the bank sent it to me. Because I guarantee you it is not, the package I present to you is not going to be in the same order that I received it. I put my packages in what I consider logical order, which is the broadest strokes down to the most detailed. And I do that for continuity, and it's easier to find any issues. Now, I will also register the transaction with the state, which in Indiana I am required to do. So I do all that, I package it up, and I send it to the title company, and they usually receive it the next business day. Then you wait. You have to wait the 3 business days for the right to rescind to expire. After that, your escrow officer will request your lender to release the funds, and once those funds are released, they will start distributing it. So first thing they're going to do is they're going to call your mortgage company, and they are going to get the final numbers, and they are going to ask how they want to be paid. Once that is taken care of, the title company will start paying everybody else. And then your loan is closed. You're done. Again, I can only speak in details about the part of the refinance process that I participate in, which is the closing. They can be boring. They can be long. It is a very important meeting. But if you have someone who is going to crack jokes, and as long as they're appropriate, try to make it an enjoyable experience, the time really doesn't feel like an hour and a half. And that's the way to go. Refinancing can be a godsend. It can also save a situation. Everybody's situation is different. Just because interest rates are at an all-time low does not always mean it is a good time to refinance your home. Understand what you're doing, understand the risks, understand the benefits, and always get the best deal for you and your family. If it means refinancing, that's awesome. I would be more than happy to help facilitate a closing. But if it's not the right time, don't push it. Always remember, the financial system is cyclical. It's going to come back around. Yes, interest rates will rise, but they will also fall again. So if you miss it this time, wait till next time. There's no law that says you have to take advantage of everything right now. Be comfortable with your situation and enjoy just owning your home and knowing that you are getting something for your hard-earned money. But that's it. I hope you guys enjoyed the content. Again, I release videos every Sunday, so don't forget to hit that subscribe button and the notification bell. That way you're notified every time a new video is released. Hope you guys are having a happy holidays and a happy new year.